Let's see. Oh crap, it's recording. Howdy there, folks. I hope everybody's doing tremendous as always out there. Oh man. 120,000 plus dollars down in the past 2 trading days in the public count. It has been rough, okay? Multi-$100,000 down if you add up all the portfolios in just the past 2 trading days. It has been rough. And so, you know what I thought we'd do today? A little bit of a different video, a little informal here. I want to go through the public count here today. What I want to do here on the channel is I want to go through valuations. I want to look at revenue growth rates. I want to look at net income growth rates. I want to tell you, should I be selling some of these stocks? Should I be buying more of some of these stocks? Should I just be holding some of these stocks? And you'll hear from my perspective across the board in regards to these positions I obviously have. And so yeah, if you really like stock market investing, I think you're going to enjoy today's video a lot. And let me know if you do. It's a little bit more of an informal video here today, folks. I just, it's Friday. I said, you know what, let's do something a little different. I'm kind of feeling a little bit of different vibes, so let's just do something a little different. So if you enjoy this video, by the way, let me know in the comments section. I appreciate y'all being here, appreciate y'all being subscribed to the channel, okay? So first off here, let's go ahead and take a peek at the public account, okay? So I don't know if you guys have seen this account. This account I started in the private stock group. I started this about, how many years ago was that? Either 5 or 6 years ago in the private stock group. And I started this portfolio to show everybody, exactly how I build a portfolio and how I manage positions and managing risk in the market and all those sorts of things and how I build out a portfolio over time, right? And so we've been at it for years now at this point in time. Like I said, it's either 5 or 6 years in. We now have it up to a $1.7 million portfolio. My long-term goal is to get it to a $10 million plus portfolio. It's not happening tomorrow, but that is my long-term goal to get to 10 million plus in this particular portfolio. So it's just a climb. It's going to take many more years to get there, but I do believe eventually one day we will get this portfolio to $10 million. Now, I want to go through each of these and kind of, talk about them valuation-wise and things like that, show you revenue growth estimates for these companies, net income growth estimates. But first, I think it needs to be said. I think this is very important. I say this, okay? This portfolio is really dictated upon 2 stocks. Let's call it the way it is, okay? Meta and Tesla have gone up so much. They've become such big positions that the portfolio is dictated by those 2 stocks. And so guess what happened the last 2 days? Tesla and Meta stock got wrecked, right? Tesla stock especially yesterday, right? Meta stock fell 4% yesterday. It fell another 2.3% today. If those 2 stocks do horrible, the whole portfolio is pulling down. It doesn't really matter what happens in the rest of the portfolio because it's just not enough to offset what's going on with these 2 stocks specifically, right? Now, if Meta is a $1,000 stock in the future and Tesla's a $1,000 stock in the future, this portfolio will run. That's how we get to, let's say, $5 million plus, right? Just based upon those 2 stocks. Never mind what happens with the rest of the portfolio over time. So that is something to kind of keep in mind. Now, also, if you notice in the public count, I am a strict growth value dividend investor. So I'm going to have certain stocks that are growth stocks I'm going to own. I'm going to have certain stocks that are more dividend stocks, right? And certain stocks that are more value stocks. And sometimes there's a stock that's even like multiple categories. For instance, a good example is PayPal. PayPal is a growth stock trading at a value stock valuation. So PayPal fits the category of like growth and value. Meta, if you look at Meta's forward P, which we'll look at all these different stocks in just a moment, this is really, even after the big move it's had, this is really a growth stock trading at a value pricing, right? And so this is where you get into some real intriguing territory. You look at something like a cake, that's a value play, but it's also a dividend play, right? So sometimes you have some different crossovers here, right? Now, by the way, they need to like combine my Avant shares here. I don't know why they separated them, Fidelity, but so let's go through these. Okay, starting out with Meta, right? Let's start out right at the top with big old Meta. So, Meta. If we go ahead and we go to earnings here, okay, and we go to earnings estimates. By the way, I'm just using Seeking Alpha for this. And if you ever want to use Seeking Alpha, by the way, it's a good platform. People write articles and stuff on. Check out my description area. I think I still have the link down there from when I did a sponsorship with them like a month or 2 ago. It's for a free 14-day trial if you're interested. You can actually access it and look into all different stocks and whatnot. But, if we look at Meta, we're trading based upon analyst estimates for 2024, which I think analyst estimates are probably low. It's my personal opinion. Trading at about 21 forward P. Now we need to say, okay, well, what type of revenue growth are we getting, okay, for a company that's trading at 2024 numbers, right? Well, analysts expect the company to grow revenues at double-digit rate, right, 11%. So this is a factor that I say this is actually still a very undervalued stock, believe it or not. Even after this epic move up, this is still an extremely undervalued position, which is shocking. Because when you think about where Meta's come from, right? Q4 2022 was $88. We're 9 months, 10 months later now. And the stock's, well, now it's $295, but it was pushing 300. You would think, man, after that move, it has to be severely overvalued. Stocks don't work like that. That's the way people wish it worked, so they'd be real simple in their brains. So it'd be like, oh, this stock went up a lot, it's overvalued. The stock's down a lot, it's undervalued. Doesn't mean that at all, okay? So the truth is, should I be selling stock or buying stock of Meta? Let's say you forced me. You said, Jeremy, you either have to sell $50,000 worth of Meta stock tomorrow or next time the market's open, or you have to buy $50,000 of Meta stock. What I would personally do is I would actually buy $50,000 worth of Meta stock. It is still a steal deal. Now, you won't see me buying more Meta stock because at the end of the day, the weighting is so huge already for me, right? What if I'm wrong about Meta? What if it's not there? What if the numbers don't happen? All sorts of things. There's always a risk of whatever you think is going to happen doesn't happen, right? And so Meta is actually still a steal deal. A lot of people think when they see a stock like Meta, they think, it's not, I missed it. That's what they think. They say, you know what? I missed it. I missed it with Meta. Sucks, man. I wish I would have been buying back when Jeremy was buying. Remember the day I bought $77,000 worth and the stock was trading at $88.94 or whatever it was, right? And a lot of people are like, I missed it, damn it. Man, I wish I was with those guys buying back then. You think you're missing it, but you haven't missed it. You missed the first major move, but you haven't missed the second move, the third move, the fourth move, or the fifth move yet. And so that's just a factor I think that's very important that people remember, right? Is they a lot of times think they missed it and they never missed it, man. So any opportunity, any dip you get in Meta for the next 6 months is a buy the dip opportunity. Bottom line. Tesla my Tesla, obviously one of the most controversial stocks in the stock market. It's been that way forever and ever. I don't see it not being that way, just to be quite frank. Like Tesla's a very debated stock. It's, a lot of people love to trash it. A lot of people love to talk good about it. And that is kind of what it is, right? Now, in regards to good old Tesla, my Tesla, right? So we're trading at about a 53, maybe 54, 2024 numbers. So right off the bat, that seems extremely high, obviously, right? It's not like a Meta situation where it was a 21, roughly in line with the market, somewhere around there. We're trading obviously massively above. But, and this is a big but, here we are with a stock that has, expected growth of 28.2% next year, right? And obviously Tesla bulls might say that number is probably a little light, and they're probably coming in with 30 or 40% growth. But I don't want to really debate that here. But nonetheless, we do know Cybertruck's ramping in mass, obviously, in 2024, and that's going to be a huge boost to the business. So even if the economy is in a weaker place, even if interest rates are still in a higher place, like just for the Cybertruck boost alone is going to be massive for this business model. And we do know the EV wave just continues to take, more and more market share, right? So nonetheless, I think that's pretty exciting. And obviously the Tesla services opportunity just gets bigger and bigger in 2024 and in future years. So that's something to kind of keep in mind there, right? So now when you kind of dig in a little bit more, we see obviously analysts have 42 PE based upon 2025 numbers. I think that number is really low. I think you're really paying about 25 to 28 times 2025 numbers, my personal opinion, right? Now, I'll keep in mind I'm going to be more bullish than an average analyst on Tesla stock, but I'm not even close to being the most bullish guy on Tesla stock. And revenue growth they have in 2025 of 25%, right? And so, when I look at Tesla overall, obviously it's a major position in the public count. If you told me I had to, this is a really tough one. If I had to go buy $50,000 worth of Tesla stock tomorrow or sell $50,000 of Tesla stock tomorrow, Oh, this one would be tough. It's a coin flip. It's a coin flip, to be quite honest. I would probably buy more Tesla stock, but it's not an automatic like it is Meta. Meta is just like, that's not even like a question. That's easy money. Tesla is more of a challenge. Now, the reason Tesla is so much more of a challenge has nothing to do with really Tesla's management team or the way they've been running that business. They've done so incredible. It's just the fact that we are in a higher interest rate environment that is a holdback of Tesla's business. Elon Musk has told us that, right? What happens if the Fed keeps raising rates, keeps rates high for a long time, and then devastates the economy? That's going to hurt Tesla significantly. It will hurt all companies, don't get me wrong. But it hurts companies like automakers the worst. And so that would make it a very hard 2 to 3 year span for Tesla to kind of work through. Not because it's their fault, it's just because they got put into a really bad situation because they sell very expensive things, and these things are bought usually on credit, okay? And so that's kind of the risk factor with Tesla. In my opinion, a lot of people think wrong about Tesla's risk factors. They think it's the competition. They think it's Ford and GM and Volkswagen. And those things are just not competition, in my personal opinion. No disrespect to those companies. But they've talked about those companies for, as long as I've been investing in the stock, which goes back many, 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 many years, right? That's always been like, oh, there's competition. It's never been a problem for Tesla. I don't see it being a problem for Tesla. It really comes down to the economy. Now, the good thing for Tesla is basically since they launched the Model S, right, around 2012, they've had a pretty good economy to work through most of that time, right? You had that short little time period in Rona where it was like, a dip in the business for 3 months or so, but then even after that, they started climbing back up. So when I think about Tesla, I think about a business that's just, it's in a tougher place because of the interest rate environment we have at the moment. I mean, it's pretty much about the most expensive to buy a car right now in terms of interest rate that we've seen in decades, just to be quite frank. Now, you look at a stock like Amazon, right? This is a building position. It represents a little over 7% of the portfolio. And this is another controversial stock similar to Tesla. And the reason it's controversial, it's not as controversial as Tesla, but the reason it's controversial is because of the valuation of good old Amazon, okay? Because this is, guess what? Another highly valued stock. So let's go ahead and take a peek here. So based upon 2024 numbers, it's trading at a 2024 PE of about 50 right now. It looks extremely high, right? The market trades at 18, 20, somewhere in there roughly, maybe 17. And we're talking about revenue growth of 11.7%. So this is a confusing part with Amazon is here we are, you're paying, closer to a Tesla type valuation, but it doesn't seem like you're getting the revenue growth, okay? So here's what I'll say. One is, this is very important. This is my personal opinion. Analysts are too low with their estimates in regards to Amazon. I think Amazon is going to surprise to the upside in a significant way for the next several years when it comes to their EPS. This isn't just a 1 or 2 quarter thing. Based upon the job cuts they did, based upon how I'm watching them watch their spending, I believe Amazon's going to come in and report dramatically better numbers pretty much almost every quarter in, quarter out. And Amazon's gone through these periods before where analysts are far too low with their expectations, and Amazon just comes in and knocks it out of the ballpark when it comes to EPS. I think they're going to have one of those 2 to 3 year spans here where they are just like killing it. And people are like, oh my gosh, this business is way more profitable than we thought it was going to be. I think you're going to see the e-commerce business margins come around significantly and that business start to become very profitable over this next few years. They've done a lot of the expense work. They've done a lot of that now at this point in time. And so I think you're going to see profitability build in that business in a significant way. And obviously AWS is going to continue to print money, right? We do know that as a money printer business. So, and obviously they own other businesses like Twitch and Whole Foods and things like that. And those are great. Those will throw off cash and whatnot. But I think the e-commerce business, which is such a disrespected business with Amazon, right? I know you see your Amazon trucks going around the neighborhood every day. I know you're probably ordering on Amazon every week, but Wall Street really disrespects that business because they're like, does it make any money really? I think you're going to see it start to make a lot of money and much more money than I think a lot of folks anticipate. And I think they're going to put up some incredible numbers. And obviously the advertising business continues to build with Amazon as well. So it's a crazy stock because it looks expensive. And the revenue growth seems nice at double-digit percentage, but I'm telling you, I think analysts are way off on their numbers. I think the company's going to end up being way more profitable than anybody anticipates. Now, a stock like Elf, this is the biggest gainer for the portfolio, right? We got a lot of, stocks that have done it very well, but nothing like Elf, right? 1,400+% gain. Good old Elf on the shelf, it represents over 6% of the portfolio. By the way, if I held all my Elf shares, Elf would be probably the biggest position in the portfolio today. If I just held all my Elf shares instead, I was a dork and I sold a bunch of my shares over time. Okay. Now, Elf is another extremely controversial stock because I'm telling you, this company is going to look expensive. I'm telling you. Okay. So, as far as what analysts have this company doing, so we're going to look at the 2025 numbers because of their fiscal year ends at a weird time period, right? Trades at a 51 forward PE. Seems very expensive. This isn't even a tech company, it's a cosmetics company, right? And as far as what analysts have them growing next year, only 13-14%, right? But here's the thing about Elf, right? And I think this is very important. And you got to remember this for all future stocks you own, because this could be what dictates ultimately where that stock price goes over time. When it comes to Elf, this is a company and a management team that has done nothing but surprise to the upside for years. Years. They've done nothing but just smash numbers and smash estimates and revenue estimates and EPS estimates and gross margin estimates quarter after quarter after quarter for years now at this point in time. So when you have a management team like that, when you have a business like that, you have to give them much more respect and credit than the rest of the market. Because you might be thinking, they might grow 13-14% revenues next year. But given the shocking numbers this company's put up over the years, there's a potential this company grows 20% or 30% next year, right? And there's a potential this forward PE for next year's numbers is actually truly really out of 35 right now, or 40. You can't automatically assume that companies will beat estimates and things like that if they don't have a track record of that. But for a company like Elf, they have an insane track record of just shocking shareholders again and again and again. And just when you think, this has to be the time the business slows down, they come through with another number and it's like, oh my gosh, are you kidding me? How do you think this stock went up 1,400+% since I owned it? Like, how does that happen? In order for that to happen, you need to come through with shocking numbers quarter after quarter after quarter for years. It's exactly what Tesla did. That's why Tesla's a 10x stock, right? You have to do that. And so when I look at a stock like Elf, it remains a hold for me. The stock looks expensive on just valuation metrics, but, I've regretted every share I've ever sold of Elf. Not just because the stock's gone up dramatically since I sold most of my shares, right? But for the mere fact that we got a management team here that just tears it up. Like, well, why would I bet against them, right? So that's Elf on the shelf. Palantir, let's drop a tier for Palantir, okay? So Palantir, by the way, no company I'm more excited to see their earnings, guidance, and listen to a conference call than Palantir. For this earnings season, they are the number one stock I'm excited to pay attention to, just to be quite frank. I'm so excited about Palantir. I mean, this is a huge quarter for them, huge quarter for Karp and the team to put up the numbers and say, we've got it like that. Our AI product is getting out there in mass, and, we're going to have a lot of deals coming through over the next few quarters. So, and significant deals, right? So when it comes to Palantir, the company's trading at 2024 PE of 66. Looks extremely rich. Now, first thing you got to understand about a company like Palantir, this is extremely important, is this company gets put into the category of basically kind of like a SaaS business. Now, like a software as a service business, SaaS business. Now, these type of business models command much bigger PE ratios than an average stock in the stock market. And the reason being is they're seen as some of the holy grail business models, some of the safest business models, because they work very closely with companies, and it's very hard, and their products are very sticky, and it's hard to just go to another product, right? It's not like, a food store where, you can eat this food store or that food store, you can get your food at whatever store, right? I got 5 different food stores probably within 5 minutes of my house. And whoever has the best pricing, well, I don't really go food shopping, but I'm sure my wife would pick whatever one has the best value for your dollar, right? And when it comes to these SaaS business models, it's just hard to break up with them. Once you integrate them inside your business to then go ahead and use something else, it's a very, 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 very difficult and delicate decision, right? A DD. So that's just something to keep in mind there. So 66 P based upon 2024 numbers. Now, companies expected to have 19% revenue growth in 2024, right? Now, based upon what Karp's talking about, right? I mean, based upon the way he's been talking recently, I think they're going to grow a lot faster. And I mean a lot faster than the numbers that analysts have at this given moment. Like, based upon the way Karp's talking, I don't see there being any way they don't grow in the 20 to 30% range, to be quite honest, right? And there is always a possible scenario, and this is something everybody needs to take into account with Palantir. There is a potential scenario when it comes to Palantir that they do something like NVIDIA did, where they come through with such a shocking number that everybody goes, oh my gosh, like really? They're growing like that? Like imagine if on the conference call, after Palantir reports earnings, imagine if on the conference call or in the shareholder presentation or whatever, Alex Karp says, we're back on track to start hitting 30% plus revenue growth next quarter, and that's our expectation moving forward. We're going to grow this business 30% plus a quarter. Everybody would flip their flapjacks over that. It would be insanity, right? Because no one's anticipating that. Now with Palantir, everybody's thinking, 15 to 19% growth type company moving forward. If they go back to the 30% number, oh my gosh, do you know what happens to that stock price immediately? I mean, it would be insane, right? Now, another huge factor that people need to take into account when it comes to Palantir stock price while we're on the subject, and this shouldn't be forgotten, but if the company comes in and has another profitable quarter this quarter, which it should be, it's going to look like S&P 500 inclusions likely coming at the end of this year, beginning of 2024, which is another huge thing for the stock price. So if you want to talk about Palantir going from $16 to its next double, let's call it $32, how do they do that? Come in and be profitable again, so it's almost guaranteed you're going to get an SP 500. Say you're going to get back to 30% plus growth. They do that. That's how that stock gets to the next double. That's how it goes from a 16 to a 32, okay? Literally those two things. That's all it needs. All it needs, because the run-up going into the SP 500 would be insane. And then obviously, if you're talking about getting back to 30% growth, that changes everything with this business model. That changes the way then it would be viewed as a hyper-growth company again, if they can start growing 30% plus again. And it would be viewed as obviously, a much more profitable business model than anybody anticipated. Because if they start putting up 30% type revenue growth again, I can tell you that EPS is going to look like a joke compared to the numbers they would actually put up. So, you don't want to get your hopes up too much about that. There's also a potential that, they just kind of put up these sorts of numbers. But I think with the way the stock's been running, I think people are expecting more from this company. And especially with the products that they have in the market and with the AI opportunity, I think there's more to be had here, right? You look at a stock like Skyworks Solutions, a big semiconductor company, right? Skyworks, this is not too complicated of a story here, okay? You look at a stock like Skyworks, trading at a forward P, or, basically based upon 2024 numbers of about 12 for the stock. And we're talking about revenue growth next year expected about 6%. It's easy. It's an easy, a good stock to hold, good stock to buy. I don't lose sleep over that one. They do get a considerable amount of their business from Apple, so it is something to take into account. Apple's in a weaker place, relatively speaking, with their business at the moment. Not like it's a disaster. It's just not exciting days for Apple right now. So, yeah, Skyworks is just an easy buy stock or hold stock. PayPal, right? PayPal, in my personal opinion, is, if we want to talk about what is the best risk-reward stock in the entire stock market right now, my personal opinion is PayPal. There's no stock in this stock market, and I mean no stock in the entire stock market that has a more attractive risk-reward profile than PayPal in terms of chances it goes down a lot versus chances it doubles up, right? So when I look at something like PayPal, we're talking about a stock that's trading based upon 2024 numbers at about a 12 to 13 PE with 9% type revenue growth. I wouldn't be surprised if they grow 10% plus next year. So that's just ridiculous. Like, there's no other way to put it. It's just silly. It's just silly. It's trading so undervalued, it's ridiculous right now. But stocks can get like that. We watched Meta get like that last year, right? So in terms of PayPal, this is a stock I continue to be a buyer of, somebody I want to, a stock I want to continue to buy here. Now, a stock like Revolve is quite interesting, right? This is a growth stock that not a lot of people really pay attention to, or kind of think about. And I think mainly because their customer base for the most part is females. And I know, obviously, most people that are stock pickers are men, right? I think my channel is about 85 to 90% men and 10 to 15% females. So shout out to the females out there that care about stock market investing. But Revolve is a really good growth company over time, right? So if we go ahead and look at what they're supposed to do for EPS based upon analyst expectations for next year, they're trading at about a 24 numbers, right? But this is a company that's expected to get back to double-digit percentage growth for revenue starting in 2024. So when I look at a stock and I think they're going to be able to do double digits a year for a long time to go in the future. I mean, a long time to go in the future, like years. So when I look at a stock like Revolve, it's a very undervalued e-commerce play, specifically in obviously the kind of the fashion category, clothing category. So, between their Revolve brand and their Ford brand, I really like this one a lot. And I think it's a great buying opportunity. I think this is just a great year to be a buyer of Revolve. I don't think you're going to get many time periods where the stock's trading under $20, right? And this year has just kind of been one of those years it's trading under 20, and I think it's a pretty special opportunity out there. It's another one of those you say, if I was forced to either buy $50,000 worth of Revolve or sell my shares, what am I doing tomorrow? I'll tell you what I'm doing. I would buy $50,000 worth of Revolve before I considered selling $57,000 worth, right? Honest is a turnaround candidate. We'll see what happens there. I hope Carla can pull it off. I really do. It's been a sad story. They just haven't been able to put it together in terms of the margins, revenue, and EPS. So we'll see. We'll see, man. It's a hope situation, unfortunately. Corsair. The good news is they're in a pretty decent capital position. So it's just like, in order to get out of that gulag of $5, under $5 stocks, they got to pull the numbers together. A stock like Corsair's looking pretty good. We're trading at about a 21, PE based upon 2024 numbers. We're trading, we're supposed to have about 12% revenue growth next year for this company overall. The gaming space should heat up next year. We should have some big games coming to market. That should be very good for the gaming sector in general. And, so Corsair is just kind of it's just like a solid stock to own, in my opinion. Not too crazy. It's not going to, knock your socks off in terms of like a 10x opportunity, in my personal opinion. But I think it's just a good company that should get good gains. I wouldn't be surprised at all if Corsair outdoes the S&P 500 over the next 5 years. That's kind of the way I would look at a stock like a Corsair Gaming, okay? Now, Oatly is kind of in the same boat as like an Honest, just been going through a really tough time in their business model and trying to put it together, right? The good news for them is obviously transportation costs have come down immensely and the price of oats have come down immensely, and they've also made some transformations in their business model to hopefully get to a much better margin place and focus their capital much more on marketing rather than having to focus on like building factories and those sorts of things. Cake. Easy peasy, lemon squeezy. Now, the one risk for Cake, obviously, is a major U.S. recession because they're so focused on the U.S. market, right? So it's always a risk with the Cake, but the good news for Cake is they really cater to, most of their customer base, kind of like the 100K and up type income brackets. So, and they'll tell you that on like the conference calls and whatnot. Trading at 2024 numbers of 11 PE, 7.8% revenue growth expected. Easy stock for me to buy. Cake's one of those stocks that it doesn't matter if there's a recession, no recession. It's a stock I'd be a buyer of, nonetheless. Now, Avant, I spoke in depth about Avant earlier this week. They've done a tremendous job. There's been a lot of teams that have really let me down, kind of in the small cap world, right? Oatly and obviously Honest would kind of fit those criteria. Oatly's kind of bringing it around now, so thank goodness. And definitely the Honest team definitely let me down a lot. But the one thing I'll say about Avant, they have not let me down. I understand we're down significantly on the stock, but the team has put together incredible numbers, and they've just gotten better and better and better. So this is a story more around like management team actually doing a great job. It's just a stock not being rewarded. Planet's been in a tough place. I'm going to wait to see their earnings to kind of really comment on that one. A stock like RH. So RH, man, what a turnaround for the stock price recently. Now, RH, very high-end furniture company, obviously, right? Trading at a forward P on the stock of 26 based upon January 2025 number. So, they're obviously in this fiscal year right now, and this ends in January. So really, I like to look at the next year, right? 26 kind of forward P there, and 7% revenue growth expected. RH is in a tougher place short term because obviously the housing market's in a weaker place, even on the super high end. And so that's kind of put RH into a little bit of a short-term kind of pickle where it's just not exciting times for RH. But nonetheless, Gary Friedman has done a great job growing this business over the last 10, 15 years. I've been, super impressed with him, the brand he's built, and I think they're going to continue to kind of, build this out over time. So overall, when I look at the public count, I continue to be happy about where it is. I don't like how heavy these positions are. I'm doing everything in my power to kind of build up everything else. But at the end of the day, I'm not, it's just, I could sell Meta and I could sell Tesla and put that money in other positions to make the size smaller. But it's just like, do I want to sell Meta or Tesla? Heck no. No, okay? So I'll ride with those. In terms of where I'm putting fresh new money, I'm putting in stocks other than Meta and Tesla, right? But in terms of selling out of those, just because they've gone up a lot, right? We're up almost $400,000 in Tesla, and we're up over $300,000 in Meta. I can't do that, man. Can't do that. That's just, it literally doesn't make sense. With Tesla's long-term future and with Meta's valuation where it is in their long-term future, it'd just be insanity to sell those stocks just because they're big weights. I'm just going to focus on building up everything else. And then hopefully some of these stocks start coming together so then they become better weights, right? Think about it if Honest starts to come around and Oatly starts to come around, and Avant starts to come around. I mean, yeah, imagine if PayPal starts to run big over this next 12 to 24 months. Those ones will become bigger and bigger weights, obviously. But the risk is that if Meta keeps going up more and Tesla keeps going up more, those could also become bigger weights. So this is where it gets into kind of some puts and takes there and some little bit of wildness, folks. So anyways, I hope you guys enjoyed this video. It was just a little different, a little bit more of a laid back video, just kind of diving into numbers and whatnot. I love to experiment and just do different types of videos on the channel and just try to bring people value different ways all the time. So I appreciate you guys being here. Thanks for being subscribed. All the best with your guys' portfolios out there. Continue to build, continue to take advantage of deals out there. Stay balanced in this market. Don't get too bullish. Don't get too bearish. What I've seen a lot of people make mistakes in this game is they get too bullish or too bearish. They think only about the positive, never about the potential negatives. They get into this mindset of just like everything's going to the moon or everything's going to crash. Those are dangerous places to be. A lot of people got into that negative thinking in the back half of last year. They made massive, obviously, decisions to sell out of their portfolios. We know everybody and their grandma was selling last year, right? Some of us were out there buying. We were seen as the brave ones, and we're obviously have capitalized on that in a massive way. But a lot of people sold out of their portfolios. A lot of people went short the market. A lot of people went crazy heavy on puts, and they lost their entire portfolios now because the market just hasn't worked their way. And so that's why it just pays to be balanced in this game, man. Don't get too far over to this side or that side, okay? And I appreciate you guys joining me as always. If you're looking to apply to join my private group with like-minded investors, folks that are focused on the long term, building up their portfolios day after day, researching stocks, looking into stocks, you can apply to join my private group. That will be they'll be in the description area. Also, if you want that free 14-day trial of Seeking Alpha, you can check out that. That's in the description area as well. And also my Patreon's in the description. So if you want to join there, see the moves I'm making in the market, how I'm building up the Patreon portfolio, you can do that. Appreciate it, everybody. Much love as always, and have a great day.